Hello everybody, welcome back to the channel. I have an amazing video for you guys today. We are going to be talking about an article posted today from Zillow, which you're really gonna love if you're in the market to buying a house, if you're looking to rent. There's some new data that's coming out and it is kind of crazy. And I'm kind of gonna go over this article for you. Now, if you wanna see it, I will have a link in the description. Now, don't forget, if you guys do like these videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Now, let's get started. Check this out. The article starts, housing affordability obstacles are mounting, but buyers who can weather the storm have more time and options, June market report. So basically what's happening is, if you were looking to buy a house, right, I'm just gonna somewhat sum this article up. If you were looking to buy a house, basically what's happening is you have more options. Now, if you kind of remember, like in 2021, it was all crazy. They couldn't even, like, houses would go on the market and they would get sold in seconds. And if you were looking to buy a house, it became very difficult to basically pick your dream house. It's either if you had cash or, you know, people were bidding above asking price. And the problem is that, you know, if you get if a house is worth, you know, for easy math, $500,000, and the appraisal comes back at $500,000, but if people are bidding above $500,000, that means that the bank, if you're pre-approved for that $500,000, you're gonna, and it starts going above, you know, people start putting bids, you know, 510, 520, 530, 540, 550. Well, the bank's not going to lend you that extra money to win the bid, to win the house. What's going to happen is you're going to have to come up with that money out of your pocket, because the bank is only going to lend you what the appraisal comes back as. So you can see there was situations in 2021 where, you know, a lot of people unfortunately were not getting their dream home. And why did it drive up so much? Why did the prices drive up so much in 2021? It's because the interest rates were at record lows. You know, they were basically historic low, and people that have money and people that, you know, had the option, they were buying up all the houses because they know that with the interest rates as low as they were, it was the best opportunity ever, and it just made the housing prices just skyrocket. Again, there was very low inventory. So check this out. I want to just read some of these bullet points right here. Monthly payments on typical mortgages are more than 75% higher than they were in 2019. That is a bad sign for me. That is a sign that people, if any kind of rift happens to the economy, if there's a lot of layoffs, this could really be a big problem, because people are paying more money than they were in 2019. So you could probably foresee a lot of foreclosures if we start seeing a lot of layoffs. Check this out. Affordability challenges are tamping down competition in formerly red-hot markets, causing steep drops in pending sales in places like San Jose, Seattle, and Salt Lake. So some of the biggest cities that saw some of the biggest growth are also seeing some of the steepest drops now, which is great. So if you are looking to buy a house, you know, you have a little bit more time, you have more options. And this is crazy. Okay, typical US rents have surpassed $2,000 a month for the first time, but growth is easing. Check this out. This is awful, because why? If people are paying a lot of money for rent, they're never going to be able to save enough money for a down payment for a house. So the fact that rents are super duper high also is an indication that you're gonna have less potential buyers, right? Because, like I said, you know, to get into a house, look, let me just find it. Where was it? I read this article. It said, hold on, that basically they're saying somewhere down here that the average, right here, the typical U.S. home value now stands at $354,000 according to the Zillow Home Index value. That's across the entire United States, $354,000, right? So what ends up happening is that, so getting back to the rent, right? You see, when the rent is higher, you know, over $2,000, now people are expected to save enough money for a down payment. So on a $354,000 house, if you want to put 20% down, you're looking at somewhere like $70,000. Now, how are people going to save, $70,000? Actually, a little bit more, because you got some fees in there. But basically, I definitely strongly do not recommend anyone putting less than 20% down, because you're gonna eventually have to pay PMI insurance, which is awful, and it's like basically throwing away money. But at the same time, it is very important to get into a house. But besides that, what I want to say is, let's just say you put 20% down, you're looking at like $70,000 plus fees, so let's just say like $80,000. If rents are $2,000 a month, okay, and you gotta see how much are people making or whatever, it just makes it very difficult to save. You know how hard it is to save $80,000? It's very, very difficult. So again, this is all looking towards a huge crash to me. Now, obviously, Zillow's not like saying there's going to be a huge crash, but I mean, the writing is on the wall. Remember, I'm not a financial analyst. I'm doing these videos, for fun, but this is just how I see it. I've been looking at the markets for a long time, and to me, it's looking like an amazing buying opportunity very, very soon. Check this out. It's starting to look good. Picky buyers are leaving more inventory on the shelf. Inventory has risen steadily this year, bringing the year-over-year deficit of 30.4 down to 9.1 in June. That's huge. That means that there's more houses out there, but the total pandemic hole is far from being filled. Inventory is still down 46% from June 2019. Yes, you're right about this, but remember, there's a lot less buyers these days than in 2019. So that kind of evens out. Extremely expensive metros and those with the largest run-up prices over the course of the pandemic, San Francisco, Austin, Phoenix, Seattle, have inventory levels closest to where they were in 2019. It's pretty good. That's that's a huge indication that we will see the prices coming down. Rental market, like right here is talking about, is just soaring. Miami being the number one hottest rental market. There's going to be a huge crash in Miami. I guarantee you. Just wait for the first hurricane to come through, and we're going to see those prices come down pretty quick. So right here, at that, summing up this article, Zillow, looking forward, Zillow home value forecast predicts a slowdown in annual home growth will continue from the current place of 19.8 to 7.8 in the next year. That is a huge drop, okay? So basically, the home growth will keep going. So there's going to be less growth, okay? A lot of growth. And they actually previously forecasted 9.7. So their forecast is even lower than what they thought. So I even predict this even being lower. Zillow now expects 5.46 million existing homes in sales in 2022. That would mark 10.8 decrease from a strong 2021. So guys, moral of the story right now, it's becoming to look like an incredible buyer's market. You have to be patient. You have to save as much for the down payment, because the person who puts down the most for the down payment will have the biggest gains in this market crash. Remember, the best way to build wealth and family wealth is to buy properties, because there's no better investment than a stick in the ground than brick and mortar. So remember that, guys. So save your money. You're gonna have an amazing buying opportunity, and try to put down as much money as possible. Now, if you guys like these videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Thank you guys so much for watching. I love you guys, and I'll see you on the next video.